SentinelOne FY2026 earnings conference call. We ask that you please hold all questions until the completion of the formal remarks, at which time you will be given instructions for the question and answer session. Also, as a reminder, this conference is being recorded today. If you have any objections, please disconnect at this time. I will now turn the call over to Doug Clark, Vice President, Investor Relations.
Good afternoon, everyone, and welcome to SentinelOne's earnings call for the first quarter of fiscal year 2026, which ended April 30, 2025. With us today are Tomer Weingarten, CEO, and Barbara Larson, CFO. Our press release and an earnings presentation were issued earlier today and are posted on the Investor Relations section of our website. This call and accompanying slides are being broadcast live via webcast, and a replay will be available on our website after the call concludes. Before we begin, I would like to remind you that during today's call, we'll be making forward-looking statements about future events and financial performance, including our guidance for the second fiscal quarter and full fiscal year 2026, as well as long-term financial targets. We caution you that such statements reflect our best judgment based on factors currently known to us, and that our actual events or results could differ materially. Please refer to the documents we file from time to time with the SEC, in particular, our annual report on Form 10-K and our quarterly reports on Form 10-Q. These documents contain and identify important risk factors and other information that may cause our actual results to differ materially from those contained in our forward-looking statements. Any forward-looking statements made during this call are being made as of today. If this call is replayed or reviewed after today, the information presented during that call may not reflect current or accurate information. Except as required by law, we assume no obligation to update these forward-looking statements publicly or to update the reasons actual results could differ materially from those anticipated in the forward-looking statements, even if new information becomes available in the future. During this call, we will discuss non-GAAP financial measures unless otherwise stated. These non-GAAP financial measures are not prepared in accordance with generally accepted accounting principles. A reconciliation of the GAAP and non-GAAP results, other than with respect to our non-GAAP financial outlook, is provided in today's press release and in our earnings presentation. These non-GAAP measures are not intended to be a substitute for our GAAP results. Our financial outlook excludes stock-based compensation expense, employer payroll tax on employee stock transactions, amortization expense of acquired intangible assets, acquisition-related compensation costs, restructuring charges, gains on strategic investments, and income tax provision, which cannot be determined at this time and are therefore not reconciled in today's press release. And with that, let me turn the call over to Tomer Weingarten, CEO of SentinelOne.
Good afternoon, everyone, and thank you for joining our fiscal first quarter earnings call. Our Q1 performance exceeded our revenue growth expectations, and we continue to deliver strong year-over-year margin improvement and cash generation. We delivered revenue growth of 23% alongside record free cash flow margin of 20%, demonstrating top-tier growth and operating leverage as we approach $1 billion in scale and sustained profitability, an incredible milestone. We continue to solidify our position as a technology leader across key growth categories of AI, cloud, data, and endpoint. Our Singularity Platform is setting new benchmarks across the industry for AI-powered cybersecurity, delivering industry-leading performance and operational resilience. Let's first turn the discussion to our latest platform innovations and customer momentum. With our land and expand platform strategy, we're protecting more enterprises than ever before. In Q1, we continue to expand our customer base and grow platform adoption across AI, cloud, data, and endpoint. We're increasing our market share in each of these categories. For instance, Purple AI achieved triple-digit year-over-year growth in quarterly bookings, underscoring strong market demand and momentum. It also achieved an attach rate that exceeded 25% across subscriptions sold in the quarter, demonstrating a strong start to the year and accelerating customer adoption of our AI security solution. In Q1, we also introduced the Unified Cloud Security Suite, bringing together cloud workload and runtime protection, cloud security posture management, cloud detection and response, cloud data security, cloud identity, and AI security posture management into a single, fully integrated solution powered by AI and our modern data analytics backend. We're delivering cloud security that is designed for real-time defense and operations, and this most recent launch makes it more accessible and easier to deploy than ever before. We're seeing strong traction. Among cloud security opportunities, a Fortune 500 industrial leader was seeking to modernize its cloud security posture. This customer wanted to eliminate coverage gaps left by the incumbent solution and looked at SentinelOne CNAPP for a robust AI-driven approach. Our Singularity Cloud Security Suite seamlessly met their complex requirements and exceeded product performance expectations. What set us apart was the strength of our cloud security offering, as well as the value of our unified platform that delivers comprehensive protection. I'm also pleased to share that our data solutions surpassed $100 million of ARR in Q1. And among AI SIEM opportunities, a large Fortune 500 retailer faced significant challenges around soaring Splunk costs, operational inefficiencies, and the complexity of managing multiple logging platforms. Singularity directly addressed these challenges by simplifying operations, lowering costs, and providing a unified intelligent security experience. This win underscores the momentum of our AI SIEM offering and the increasing preference for our modern AI-driven cloud-native data solution. Among endpoint opportunities, a leading Fortune 500 financial institution consolidated multiple security vendors by switching to SentinelOne, reducing overhead and improving performance. Our unified platform and autonomous security were clear differentiators. Overall, our success with large enterprises and platform adoption continues to drive higher ARR per customer, which reached a new record in Q1. In addition to growing our presence with the largest enterprises in the world, we continue to see strong growth in the mid-market. We maintained healthy expansion rates with our existing customer base. Turning to our partner ecosystem, we're constantly deepening engagements, especially amongst our strategic relationships. As AI-driven threats grow more sophisticated, both our partners and our customers are increasingly turning to autonomous security solutions that reduce response time while delivering real-time machine speed protection. To further support this shift, we're making it easier for our partners and customers to access our platform. In Q1, we launched Partner One, an entirely reimagined program for MSSPs, incident responders, VARs, and technology partners. It features a streamlined tiering structure, performance-based incentives, and customized enablement resources. The launch of Partner One will enable us to reach more customers, increase flexibility, and reinforce our role in the broader cybersecurity ecosystem. In the public sector, we're demonstrating technology leadership and opening new opportunities. Last year, we achieved FedRAMP High authorization for endpoint and AI SIEM. I'm pleased to say that earlier this month, we achieved FedRAMP High authorization for Purple, CNAPP, and hyperautomation across the Singularity platform. Purple AI is now the first and only cybersecurity agentic AI solution approved for U.S. government organizations. This milestone is an important competitive differentiator and reflects our deep strategic commitment to safeguarding the U.S. government's most sensitive environments. Cybersecurity is national security. While near-term uncertainty around federal budget allocation and spending persists, our broader pipeline and opportunity set remains strong. In fact, we closed a seven-figure renewal and expansion deal with a large federal agency in early Q2. We continue to grow our presence in the federal space, though deal timelines may vary in the near term. We're actively partnering with federal, state, and local agencies, many of which depend on federal funding, and engaging with them at the pace aligned to their considerations. We're proud to support our government institutions and improve the country's cyber defenses. All of this success stems from our focused innovation strategy and technology leadership. Most recently, we earned prominent recognitions across the industry. In April, Frost & Sullivan named SentinelOne the top-performing vendor in both growth and innovation in their 2025 Radar for Endpoint Security. We're also honored to be recognized at the SC Media Awards as both the best endpoint security and the best cloud security. These accolades clearly reflect the strength of our Singularity platform and the innovation our teams are delivering. At RSA, we announced Athena, the next evolution of Purple AI, showcasing our vision to deliver the industry's first true end-to-end agentic AI platform for cybersecurity. It's time to combine the two most powerful forces in the world, humans and AI. Purple AI understands context, draws connections, and acts autonomously with speed and precision. We're enabling customers to seamlessly connect to third-party data sources, unlocking the full potential of Purple AI for enterprises, regardless of where they are in their data migration journey. Security teams can get faster response times, broader coverage, and scalable intelligent SecOps. With our latest innovations, Purple AI leverages trillions of security-relevant events, resulting in a unique dataset that is continuously tuned, refined, and optimized in partnership with our elite MDR team and extensive MDR partner network. Purple AI's auto triage, now generally available, helps investigate threats, orchestrate multi-step responses, and remediate incidents in seconds. Also generally available is Singularity Hyperautomation. Combined with Purple AI, this allows enterprises to harness no-code automated workflow capabilities to execute novel detection rules autonomously. For organizations overwhelmed by thousands of daily alerts and manual operations, our autonomous security innovations empower teams to focus on the most critical threats. Let's shift to the broader demand environment and trends we're seeing in the market. Demand for cybersecurity remains strong and resilient. Given the heightened macro uncertainty in April, we observed elongated sales cycles as certain customers paused their spending decisions, impacting our Q1 net new ARR. As a result, we're taking a more measured stance on our full-year growth assumptions. Importantly, we haven't seen project cancellations or lost deals, and our win rates remain strong. We're focused on execution and staying nimble. In parallel, cybersecurity is undergoing a fundamental transformation. Everything from how software is developed or how security is deployed to how outcomes are measured is evolving rapidly. The software model as we know it is undergoing an AI-driven transformation. In a world where threats move at machine speed, legacy siloed tools or complex platforms built around static features are no longer effective. Going forward, cybersecurity also requires a new standard, one where software adapts to the need of the business, not the other way around. In our view, the future of cybersecurity will be powered by integrated data, visibility, and AI-based protection. And that's what we're building at SentinelOne, a source-agnostic, unified security platform powered by the industry's most advanced security AI. Our goal is to simplify security significantly using AI. As the industry advances, we believe our platform and innovation approach will become increasingly critical for any customer in any deployment model across any environment. For years, we've been at the forefront to lead this shift. We, too, have undergone a significant shift through platform evolution in recent years, now with a platform-wide AI-centric approach. As a primary example, non-endpoint solutions represent approximately half of our quarterly bookings. Going forward, we're making our offerings more flexible and even easier to access, adopt, and deploy. We believe this will increase velocity, drive broader platform adoption, and unlock more value for our customers over time. As our offerings evolve, so is our go-to-market, going from a product-centric sales approach to a platform sales strategy. We've made good progress over the past year, and as we look ahead, our training, enablement, and partnerships will continue to evolve. We are confident these changes will support high growth for years to come. In closing, I want to recognize the incredible teams at SentinelOne. Through this dynamic environment, their drive, resilience, and commitment power everything we do. In particular, our teams are working tirelessly every day with prospects and customers to deliver leading security across the world. I'm also grateful to our customers and partners for the trust they place in us every day. We've started the new fiscal year delivering top-tier growth and improving profitability. The future for AI-powered security is approaching, our opportunity is vast, and our differentiation is becoming stronger. With that, I would like to turn the call over to Barbara Larson, our Chief Financial Officer.
Thank you, Tomer, and thanks to everyone for joining us today. Let's review the details of our Q1 financial performance and our guidance for Q2 and the full fiscal year 26. As a reminder, all comparisons are year over year, and financial measures discussed here are non-GAAP, unless otherwise noted. We continue to deliver industry-leading growth and strong margin expansion. Our revenue of $229 million exceeded expectations and grew 23%. Revenue from international markets grew 27% and represented 38% of our quarterly revenue as we continue to deliver balanced growth across geographies. Our total ARR grew 24% to $948 million. As Tomer mentioned, macro uncertainty was pronounced in April and impacted our Q1 net new ARR. This is a dynamic time, but we believe we're well-positioned to navigate evolving market conditions. We continue to gain market share, and we're seeing continued success with platform solutions across endpoint, cloud, data, and AI. Customers with ARR of 100,000 or more grew 22% to 1,459. Our average deal size, or ARR per customer, expanded double digits year over year, highlighting our platform momentum across all segments of the market. Remaining performance obligations continued to re-accelerate and grew 33% to $1.2 billion. In addition to larger deal sizes, we're also seeing customers commit to longer-term agreements with SentinelOne. Contract duration for both new and existing customers expanded year over year in Q1. This is a testament to the trust we've established with our customers and our commitment to future innovation. Turning to margins, we continue to deliver margin expansion and free cash flow improvement. In Q1, we maintained an industry-leading gross margin of 79%, and our operating margin expanded over 4 percentage points year over year to -2%. We also achieved our 4th consecutive quarter of positive net income. This performance was driven by scale, cost discipline, and our focused investment strategy. I'm especially pleased with our cash generation, producing a record 20% free cash flow margin for the quarter. On a trailing 12-month basis, our free cash flow margin expanded 5 percentage points. Turning to our guidance for Q2 and fiscal year 2026. Our full-year outlook reflects Q1 results and the potential impact of heightened macro uncertainty. That said, we remain encouraged by the continued adoption of our new solutions, the shift towards larger, more strategic platform deals, our leadership in AI, and the strength of our competitive position. We believe we are well-positioned to continue to outpace market growth and create significant long-term value. For Q2, we expect revenue of approximately $242 million and growth of 22%, driven by sequential net new ARR growth that exceeds typical Q2 seasonality. For the full year, we now expect revenue of $996 million to $1 billion, representing 22% growth, top-tier performance, especially against a backdrop of ongoing macro volatility. Turning to our outlook for margins, we expect Q2 gross margin to remain at approximately 79%. We expect full-year gross margin to be between 78.5% and 79.5% as we grow our customer and platform base. For operating margin, we expect Q2 to be break-even, implying a year-over-year improvement of approximately 300 basis points. For the full year, we are reiterating our expectation for operating margin to be between +3% and 4%, an improvement of over 650 basis points at the midpoint compared to fiscal year 2025. In addition, we still expect free cash flow margin to exceed operating margin for the full year by several percentage points. We remain focused on instilling operational discipline and enhancing efficiency across the business. We believe these efforts position us to deliver stronger year-over-year margin improvement in the second half of fiscal year 2026, while also continuing to reinvest in the business. Our investment approach strikes a thoughtful balance between maximizing long-term growth opportunities and maintaining a strong, responsible, and profitable financial profile. First, we continue to invest in transformative innovation. We're committed to advancing the technologies that are redefining the industry: AI, data, cloud, and automation. Recent launches like Purple AI Athena, hyperautomation, and our cloud security suite represent a glimpse of what's possible. We're still early in helping our existing customers unlock more value from our platform, and we're focused on driving deeper adoption. Second, we're driving profitability and operational efficiency. Our investments in AI and automation will continue to drive operational efficiencies. We've also made solid progress on margin expansion and are taking deliberate steps to build on that momentum. We've been actively aligning teams and resources, enforcing greater discipline, and reinvesting in the highest impact opportunities. We're optimizing our facility footprints and personnel needs and remain focused on sustainable and profitable growth. Bringing this all together, we're beginning to generate more meaningful positive free cash flow. And in Q1, our cash equivalents, and investments increased to $1.2 billion. This strong financial position provides us with flexibility to allocate capital in ways that support both growth and shareholder value. In that context, we're announcing a $200 million open-ended share repurchase authorization. This decision reflects our confidence in the long-term trajectory of the business and our view that our current stock price does not fully reflect our underlying fundamentals or future potential. This program gives us the ability to act opportunistically in the market, reduce dilution over time, and continue investing in innovation and strategic priorities, all while maintaining a strong balance sheet. We continue to scale the company on a foundation of strong fundamentals, expanding margins, and significant long-term growth potential. Thank you all for joining us today. We'll now take questions. Operator, please open up the line.
Thank you. At this time, if you would like to ask a question, please click on the Raise Hand button, which can be found on the black bar at the bottom of your screen. When it is your turn, you will receive a message on your screen from the host allowing you to talk, and then you will hear your name called. Please accept, unmute your audio, and ask your question. As a reminder, we are allowing analysts one question today. We will wait one moment to allow the queue to form. Our first question comes from Joe Gallo with Jefferies. You may now unmute your audio and ask your question.
Hey guys, thanks for the question. Can you just talk a little bit more about incremental ARR in the quarter? You were expecting net new ARR to grow this year, and it was down materially in 1Q. I mean, was there more churn than expected from Deception? Was this a few large deals that slipped or churned? You know, maybe just what gives you confidence that this is macro and not competitive? Thank you.
Thank you for the question. First of all, I think we're already seeing improved trends in May, and we totally expect the year-over-year net new ARR growth in Q2 to improve relative to Q1, and it will imply well above seasonal growth in Q2 compared to last year. So we believe that this was mostly isolated to kind of a Q1 dynamic, if you may. It is more around slip deals than anything else. We've not seen any type of elevated churn. So a lot of what we've seen and observed in Q1 goes back to just more macro volatility than I think anybody expected. If we kind of think about the second half, I think in a more holistic way, the opportunities, the engagement we see, demand is still strong and pipeline is still strong. So all of that just points us again to fundamentals being intact.
And I'll just add, in terms of Deception and your question there on churn, that came in line with our expectations.
Our next question comes from Brad Zelnick with Deutsche Bank. You please go ahead with your question.
Great, thank you so much. Barbara, my question is for you. I just wanted to better understand your guidance assumptions. And does the incremental conservatism assume the April trends persist throughout the year? And just related to that, you know, what did you see in May? And I don't believe in your guidance you've given us any update for ARR, but with the revenue cut on the full year, should we also assume that the 200 million plus or minus ARR target no longer stands? Thanks.
Yeah, thanks, Brad. Appreciate the question. So just in terms of the broader piece, I would say our outlook is reflecting underlying kind of new business growth as we move throughout the year. We definitely are seeing improved trends in May compared to what we saw in April, but we're also trying to be thoughtful about the environment and the potential that there might be further unexpected external disruption. So trying to capture that all in our expectations for FY2026. As you noted, our revenue guide, we did decrease that by 1%, and you can assume that means our internal expectations around net new ARR came down a slight bit as well.
Our next question comes from Gabriela Borges with Goldman Sachs. Please go ahead with your question.
Hi, good afternoon. Thank you. Tomer and Barbara, I was hoping you can give us some more specific commentary on what customers were telling you with the slipped deals. We understand the general macro uncertainty, but are customers saying, for example, that they expect to have more certainty later in the year? Are you expecting the slipped deals to close in the July quarter? Is it perhaps going to take longer? Help us marry the broad economic commentary to the specific SentinelOne commentary.
Sure. Let's maybe start a bit more high level. The macro backdrop changed in Q1. I think for a lot of folks that was fairly unexpected, especially in April, which is our largest month of the smallest quarter. So we observed longer sales cycle, and I think customers basically paused their spending decisions for a few weeks. We have not seen any deal cancellations. I think as we look ahead, unknowns around federal purchasing, global trade, all of that is still present. So we're trying to be mindful and reflect that in our outlook. Second, and positively, we do expect 22% growth this year. It's a top tier growth rate, especially in a challenging environment. So our success with large enterprises, the platform adoption continued to drive higher ARR per customer. That actually reached a new record in Q1. So we're seeing many positive factors, but at the same time, it's really clear that we're trying to create some more room to be able to digest better any potential further disruption. This environment is proving to be very unpredictable on almost a daily or weekly basis. So we're just trying to take a more tapered approach as to our growth expectations. As we